In today's video, I'm going to share a game-changing strategy that's completely changed the way I trade in crypto. I am now exclusively using Meteora's DLMMs for the buying and selling of all of my Solana-based tokens, and I'm doing that using the BidAsk strategy. If you're tired of dealing with high fees, slippage issues, and price impact based on the orders that you do in the different trading platforms that you've been using, then this is the perfect video for you. And guess what? Instead of paying the fees for the buying and selling of these tokens, I'm actually the one who's collecting the fees for the selling or buying of these tokens. Let's dive into how this works and explore all of the different benefits that is offered. First off, let's do a quick recap of what DLMMs are. DLMM is a type of automated market maker that dynamically adjusts liquidity across different price ranges. This means it can provide more efficient trading by concentrating liquidity where it is most needed. Now let's talk about the BidAsk strategy, because this is where things get interesting. Unlike traditional limit orders, where you set a price to buy or sell a specific amount, DLMMs allow you to provide liquidity at both ends of the market, buying at lower prices and selling at higher prices. Essentially, you're setting a price range where you're willing to buy and another way where you're willing to sell. Here's the kicker. By using DLMMs, you actually earn fees on every trade that happens within the specified range. This is because you're providing liquidity to the market. So not only are you setting your trades up for potential better prices, but you're also getting paid through transaction fees that are taking place. So all the people that are doing basic limit orders or market orders, whatever it be, they're using the liquidity pool that you have provided your liquidity to. And not only are you swapping out your tokens from one token to another, but you're also getting paid in fees for all of those different people doing that trading. This is, of course, a massive advantage over just doing a limit order on some DEX or a centralized exchange, because you're not the one who's paying the fees. You're the one who's collecting the fees, because you're providing the liquidity needed for these different transactions, for these different people to do. Another fantastic benefit is the fact that your slippage is reduced. Because DLMMs concentrate liquidity, there's less price fluctuations during trades, which means you get closer to your desired price. Plus, with priority fees, your orders are most likely to be filled before others, giving you a competitive edge. And since you're providing liquidity, you have a better impact on the price itself, minimizing the cost of large trades. We're going to look at an example where this could have saved someone a lot of money. Now let's look at a live example of how you would set one of these up. Assuming I was looking to buy the JLP token, instead of going to a DEX and setting a limit order, what I would do instead is, first things first, I'll go to Meteora and I'd look for the particular token that I'm interested in. So for me, that's JLP. And I'm looking to buy JLP for USDC. So I'm going to look for JLP and I'm going to find the pool with the lowest bin step and the lowest amount of fees, because that is where I'm going to collect the most amount of fees, and that is where my trade is most likely to go through. So we'll choose that particular pool, we'll grab the address, and we'll open that in the Screener, just to take a look at the prices there. Okay, so we see that here. Let's change that to USDC, and let's take a look here. Okay. Assuming I was looking to buy the price at around, let's say, this price, what I'm going to do is I'm going to set a very tight range between that specific price and just slightly below it. So these two prices, right? And so what I'm going to do from here is I'm going to choose the upper bound price. So first of all, I'm going to go back into Meteora. I'm going to set a BidAsk strategy. And for my, first of all, I need to connect the wallet. Let's connect the wallet. So once the wallet is connected, I'm going to see the amount that I have available for USDC. So what I'm going to do is I'm going to choose BidAsk, and I'm going to max out USDC. And so when I max out my USDC, you can see what's happening here is as the price gets lower, I'm buying more JLP. And so I've set a specific range. It's gone a little bit lower, so let's maybe lower that as well. We'll go a little bit lower. We'll set the upper bound to be here and the lower bound to be maybe just a little bit lower. So here, we're going to take that specific price, and we're going to put that into the upper bound in Meteora like this. And the lower bound is going to be this price that you see here, like this. So this has a 6 number of bins. And so what's going to happen here is as the price goes lower, I'm going to be buying more JLP. So this is ready to set up. So let's set this up. So let's approve this. And let's see how this works. Okay, so the price went just a little bit lower as I was putting in the transaction. So I'm going to be buying more at this particular price compared to this price here. So let's take a look at this chart, what's happening here. So it's gone just a little bit lower than my upper bound. So that's why that's changed. So this is creating the pool at the moment. Let's let this finish. So that's completed. That's created the pool. And so now what we should see is my USDC being swapped to JLP, right? As the price fluctuates. So it's gone just a little bit lower and it's gone back up to this middle line here. And as you can see, as the USDC amount that I have gets changed to JLP and back to USDC as the price has gone up, what's happening is I am collecting fees. Of course, the amount of fees is very low because my actual order was very low itself. But if this was a bigger order, I'd be collecting more fees. And so now what I'm doing here is I'm waiting for the price of JLP to go back into the limit where I want to collect JLP, where I want to swap out my USDC to JLP. So I wait for that. You can see it's kind of slowly going back to that range. And as it goes back into that range, what's going to happen is my USDC is going to get swapped out for JLP. And so that's how that works, right? And the idea here is that once it gets out of this range, once it goes below it, that's my limit order done, right? And so that is me having bought my JLP. Once that's done, what I'm going to do is I'm going to close out this position and I'm going to open another position. And this other position, I'm going to be selling JLP at a much higher price, right? And the same thing is going to apply. I'm going to create a small range, just like you see the range for buying. Let's change the color of this just so it signifies something different, a different action, selling. So here I'm buying and here I'm selling, right? And so whenever this goes below this range, what I do is I close out this DLMM. And when it goes above this range, I also close it out. So down here, I'm swapping the USDC to JLP. And up here, I'm swapping the JLP to USDC. So that's how that works. For the example that I mentioned earlier, let's take a look at that example. We have this person here who swapped out 2.5 million worth of WIF to 1.1 million worth of Mumu. That is insane. In this one single trade, this person lost more than half of the value of the token that they held. Had they set up a DLMM for this swap, not only would they have reduced the price impact and the slippage for this, but they would have collected all of the different fees that were collected by Phoenix and Meteora and Radium in this entire swap that happened, right? So granted, a WIF to Mumu DLMM probably wouldn't have been the best DLLM to use, because I don't think there was too many people swapping WIF to Mumu, but you get the idea, right? Instead of you using a limit order and losing more than half of the value of your token, this person could have instead reduced that, and instead of paying the fees, they could have been collecting the fees. You know what I mean? So that is the example here. So in summary, by using a DLMM with the BidAsk strategy, you can effectively buy and sell your tokens while earning fees, reducing slippage, enjoying priority in order execution, and achieving better price impact. It's a win-win situation that maximizes your profits and minimizes your costs. If you're serious about trading, you should definitely consider switching to this strategy. If you found this video helpful, please let me know. Thank you for watching.